Welcome to our weekly Forex forecast. My name is Norris. I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. Before we get to the charts, I want to make a couple of important points when it comes to trading, and particularly our own analysis. The pattern on the chart is a reflection of the market's underlying fundamentals. That's really an absolute with us. And furthermore, what happens on the lower time frame charts represents what will happen on the higher time frame charts. Very, very important concept. When you take these two together, it's really going to free you up as far as seeing what's happening in the markets now and what's most likely to continue to happen in those markets. First market we'll take a look at is the Australian dollar. We've been saying for a long time we think the Australian dollar is going to 80. We still think there's a good probability you'll get there by year end. I'm going to pull out to the long term, the monthly chart. Longer term in this market, we actually like the idea of accumulating the Aussie dollar somewhere around that 80 level, potentially even on the approach to it. We think overall, with the momentum down, you could probably even get into the 76 handle all the way down here. You see that Gann 5/8 line at 78.5 or so. We think it'll probably eclipse that. However, long term, we'd swing pretty quickly back into the accumulation camp here as far as believing long term that buying this dip here is more opportunity than a risk. Australia's in a good position long term. Australia is to China what Switzerland was to Europe and the Middle East in many ways many years ago. So we think Australia's in a pretty good position. They have a great population pyramid. They have a lot of things going for them. They have a lot of natural resources. So we'll swing pretty quickly from being short-term traders on the downside. We just need to let it climax on the downside. We need to let this bear market play out. So no hurry, but that's something we're looking at a little bit longer term. Swiss franc next. Well, here's the dollar Swiss, and we'll jump down to a weekly. We'll jump down to a daily chart, and you can see that sawtooth pattern. And you know, we don't see any reason why that would stop. You can see the market continues to put in higher low, higher low, higher low. We just think there's more room on the upside here. Really nothing to change the fundamentals that are already in place that are representative of this downtrend in the Swissy uptrend in the dollar index. We'll show you the futures chart here. Here's the futures chart, a little bit easier to see what I'm saying about this long-term pattern in place. There you can see the downtrend in the Swiss franc. This is interesting too. Long-term here, technically you are at pretty good support long-term in the Swiss, so wouldn't surprise us if you see a correction in this market to some degree. However, really this chart makes the point that once you do take out support, there's a lot of room below in the Swiss franc. This is the Swiss franc futures chart. It's the Swiss franc versus the dollar versus the dollar versus the Swiss franc. So we think par is a likely downside target here, although you can see you're sitting at support right now. If I drop down to a daily chart in the futures, you can see you're just above support. You have pretty good support down below, but we think with the current momentum in place, downside momentum in place, you're looking at par. And from there, it's only natural that you'll see consolidation. But here's that long-term monthly chart again in the Swiss franc futures. A lot of room below should you get below the par level. Next market, the dollar index. We don't see any theme. We don't see a change in our dollar bull theme that's been in place now the last couple of years. We think there's still more room up above, and you look to the monthly chart and put that in perspective. We think overall you maintain your long-term long dollar positions here, and any kind of correction, regardless of what time frame it were to occur on, even a daily or a weekly time frame, we think that's going to be an opportunity to add to long positions. Here's the dollar index on the weekly chart. You can see on a weekly chart it's kind of extended. You know, if we like dollar index long term at the 88 level, I can imagine we would love it at the 84 handle. So we would welcome a correction in this market, but we're still maintaining our long-term long positions here. Euro US dollar next. We see no change in the fundamentals or the stance of this market. Let me pop out to the futures. to give you a long-term perspective here. And here's what I have to say. All things considered, the euro, here's your euro futures chart. Historically, it's held up pretty well, right? It continues to hold above that 120 level. You continue to see support at that level going back 5-6 years. That's why I'm saying, hey, the euro's held up pretty good. However, going forward, we have to ask the question, what happens when 120 doesn't hold? And we see that as a pretty likely outcome. You may get a correction in the dollar, a downside correction in the dollar. You may likely, if that were the case, you'd get an upside correction here. You get a short covering rally in the euro. We see that as being more short term, and the big event, the big picture, is going to be what happens when the euro breaks 120. And I'll give you a hint of what could happen there when you look at what happened to the Japanese yen. Here's the Japanese yen futures this year. Here's the monthly chart, and that's all dollar strength. Look at how the yen is just collapsing, and we think that's a harbinger of what's going to happen for many of these currencies against the U.S. dollar, because the U.S. economy is so strong, because crude oil prices are so much cheaper than they were, and we'll cover the crude oil shortly also. So for our money, it's still coming up. It's still coming up dollars. Speaking of that, here's the gold market. Here's a monthly chart. Let me back down to a weekly chart. You can see we pointed out support here, and we said we wouldn't be surprised if you got a short covering bounce here, kind of a dead cat bounce. And sure enough, you're getting it. Look at how the market found support there. Then it found support again at a risk tolerance threshold level there. So you have a little budding short covering rally here in the gold. The timing is pretty good for that. We talked about that 2 weeks ago when we said that traders who are sitting on a lot of profits for the year need to go ahead and pay those taxes on that money. You don't want to be in a position where you make a lot of money in 2014 and then the market corrects into the new year 2015, but come tax time you owe taxes on 2014 profits. So a lot of traders, they'll just exit the trade, they'll close out the trade, they'll pay the tax man, and then move on. And you see that oftentimes you'll see that behavior reflected in the market as you'll get a counter trend move come year end as players take money off the table and make arrangements to pay their taxes. And wouldn't surprise us if that's what's going on here in the gold market. When I pop down to a daily chart, the market's giving us a natural upside target here. We think you'll have we think you'll see a nice upside target with good potential resistance, right around 1266 or so, just below 1280 there. So that's going to be a natural area for us to watch as far as setting up longer term gold shorts. Covering the commodities, let's take a look at crude oil. I drew some Gann lines on the crude oil chart to put things in perspective for you. Let me pop out to a monthly chart, and you can see this in textbook Gann. Basically, the lowest risk time to be short a market is the yellow line in Gann theory, and the highest and the lowest risk time to be long would be the yellow line down below. That's the 7/8 line versus the 1/8 line. Basically, you're taking the high to low. You're taking the low to high in this market, and you're putting that frame on it. And Gann theory's been around a long time. It's still pretty effective, as you can see. You can see that the red line represents a lower risk time to be long in the market. Sure enough, if you went along that red line, you're pretty happy there. Likewise, the red line on top, this is basically, that red line here represents 25% of the range. So the 25% lower risk time to be long. 75%, likewise, the red line on top, that represents a lower time to be short. And look at how well that worked. Well, the bottom line is here is, keeping it very simple, we all need to be licking our chops about the opportunity to start accumulating oil assets if on the approach to that 25% level this time. So it's going to be interesting. I would have thought that the market would have consolidated somewhere around the 60 level, but momentum being what it is, commodities markets being what they are, it looks like you overshot that level for now. It's easy to start thinking on the long side, hey, maybe we want to start dollar cost averaging, maybe we want to start accumulating at those lower levels. Absolutely, you want to think that. However, the momentum's still down pretty hard right here. This bear market's only a few months old too, so realistically, I'm still thinking in terms of selling the next rally rather than going into accumulation mode, going into buy mode just yet. But this is something that we'll continue to monitor. I don't think we need to monitor it on a week-to-week basis, such as we do everything else, but probably a month-to-month basis. And we'll continue to cover that for you because, crude's in the headlines right now. And at some point, yeah, it's going to get cheap enough to where we'll take a look on the long side. Thank you so much. My name is Jay Norris. Always a pleasure to see you guys. And remember, the pattern on the chart is a reflection of the market's underlying fundamentals. Thank you so much, and we'll see you next week.